Friday, December 16th, Tesla stock closed at $150 a share. This is 2022. Tesla has done quite the round trip, and people are worrying about growth for Tesla in China and discounts they're doing in China, Europe, and the US. We're about Elon's antics on Twitter and also Elon selling the stock and some other things. So what I'm going to do is I'm going to show you a model, a financial model looking forward to see what is implied by the $150 a share on Tesla. And you may be surprised. And then we're going to look at how you might adjust from there. I really got my start in 2019 with Tesla. And one of the things I did that was helpful was I would look at Wall Street projections for Tesla, and then I could adjust my own numbers. So one funny thing was Adam Jonas, he said that Tesla was only going to sell 71,000 cars in China in a whole year, and that would be the highest year they would have. Tesla has done that in a month in China. So at the time, China's electric vehicle and luxury car market was twice as big in the US, and Tesla was selling 150,000 in the US. So I figured if Tesla's only half as successful in relation, that they would easily sell 150,000 in China, and that was their the capacity of the factory. Now, Tesla actually lied. They sandbagged about that capacity, and it's actually 250,000. So we're going to get right into it. I'm going to share my screen. I'm Bradford Ferguson with Halter Ferguson Financial. This is not financial advice. This is our disclaimer at hffinancial.com/disclaimer. In 2014, Mark Spiegel, who's been short Tesla stock for a long time and lost a lot of money, forecasts for that year for 2014 were that Tesla were going to do 35,000 cars that year. And Elon had just come out and Wall Street had confirmed or whatever that Tesla was looking to do 500,000 sales in 2020. And what Mark said is that it implied a annual growth rate of 56%. And he said, no complex product manufacturer has ever grown that quickly from a revenue base of 3 billion or more. And he said these projections were absurd. So you'd think if Tesla did that in 2020, Mark would acknowledge he's wrong and kind of like throw in the towel on Tesla. Well, that didn't happen. So let's move on. People are talking about Tesla having demand problems. Tesla's demand is doing just fine. They're growing at a really rapid pace. And what you can see when companies have really rapid growth is it can be a little hard to match the incremental supply and demand on like a daily basis. And that's what Tesla has to do when they sell cars. They're selling cars every day throughout the world. What this chart is showing is the countries who report daily sales in Europe. It's a small sample size, but we also see a similar pattern on a monthly basis. But what we're seeing is the impact of record exports from China because of European demand and the ramping of the factory in Giga Berlin, in Berlin, Germany. And why did Tesla open a factory there? Because of huge demand for Teslas. Okay, so this is from eu-evs.com. It's a nice website. Encourage you to bookmark this link here. Let's review Tesla's historical growth rate of their demand. So whenever they sell their cars, that means someone demanded the car. And in 2014, it didn't quite happen that 34,000 were sold. It was 31,000 and change. But what was amazing is in 2020, Tesla hit their goal that Elon said. They sold nearly 500,000 cars. They missed it by less than 1/10 of 1%. And what this meant was compared to the 31,000, they did 58% growth rate. And they're on track to make it a 60% annual growth rate since 2014 this year if they do 1.35 million. That's not my projection, but I'm just threw a number in there. What you can see is that the annual growth rate does vary quite a bit. In 2019, it happened to be very close to 50%, but generally it's not going to be 50% in 1 year. And what Tesla's management is projecting is that on average, Tesla is going to grow at 50% a year. So the growth and demand is insane. They're growing at a huge rate. It's going to be lumpy. They're not going to, if they're going to grow at 50% a year, they're not going to grow at 11% per quarter every quarter. There's going to be some fits and starts to it. That's what happens with any large growth company. So there are no demand problems. Tesla's on track to get around this number. That's a huge success for them. It would still be 44% year over year if that was the number. So let's look at the $150 a share that Tesla's trading at now. So it's at 150 a share. That's implying a stock price of 434 billion. Sorry for revealing the whole spreadsheet at one time. I wanted to find a valuation where it equaled about $150 a share. People are worried about Tesla discounting prices. They raised their prices quite a bit versus a year ago. And if they lower them back down, I don't think it's much of a big deal. But what we're looking at here is if Tesla meets their goal of about 20 million cars a year by 2030, and if their profit per car, their net profit as a company per car essentially got cut in half, that the stock would be worth around where it is today with nothing else going on. And the profit per car of the latest quarter, and I think I was looking at the year here for the profit per car. I think that's what I was doing. Or no, I was doing per quarter. Yeah, so I looked at the last quarter. The last quarter was actually challenged by a drag on profits from Austin and Berlin. I don't think those factories were actually negatives, but their profit per car coming out of those factories wasn't as good. So this valuation does not include Tesla Energy selling the batteries and the Megapack and the power walls. It does not include autonomy. It does not include Tesla Bot. So this is, in my opinion, a fairly conservative valuation. And they're on a great path this year for doing 2.1 million cars next year. So when you calculate it out and are just kind of looking at net profit per car, you look at $9.45 in total net profit next year. There's no Wall Street person that's that low for next year. Some of them are forecasting declines from this year, which may be as much as 13 billion and 13.5 billion. So I think that's on a GAAP basis is what I looked at. These are not precise numbers. These could be wrong, but it's to give a general idea. So no one's projecting it this low, but also Wall Street doesn't project 2030 numbers to be this high. So I think what Wall Street is looking at, if they're looking at a $150 a share value for Tesla, is some mix in between where they're making more than 4,500 per car, but they're making less than 20 million cars in 2030. So the reason why you own any company is for the stream of their future profits. So what you need to do when you're valuing a company is you need to look at their future profits, and then knowing that there's some risk in attaining those, you discount those future profits back to today. So when you discount the profits for next year back to today, you divide by 1.13. It's up here in the upper left, and you divide by that amount one time. Then the next year you divide by 1.13 two times. So you're discounting by 13%. So if you're discounting by 10%, you would divide by 1.10. And do that each year for the future profits. So this is calculating it all out, and then you have to take a terminal value. And when you do a terminal value, you look at the last year, you assume a certain rate of growth in the profits going forward. So I took 13% because that's our discount rate, and I subtracted 3% as like that Tesla would just grow 3% from there on out, which I think is very low. But you know what the total value of these profits today would be, 497 billion. And what's a little scary about that number from a valuation perspective, and that value investors aren't going to like, is that this terminal value, the future stream of profits that's 2033 and beyond, is a majority of that value, so over 50%. But I think the terminal value is conservative. I think a 3% growth rate is conservative. The other piece I did here is I assumed in 2024 that they're not quite ready with either the Tesla compact hatchback, or the robotaxi, and that they only grow less than 30% that year. And then the next year they kick things back to 50%. And then I assume 50% growth rate. I rounded up here, and then just slightly. And then I assume that it's generally going to be hard for Tesla to grow their production by much more than 3 million units per year. Maybe that's a lack of imagination on my part, but you'd have a growth by 1 million a year in like 3 continents or something like that. That seems like a lot of growth still to me. So what's interesting about this is that if they only do 18 million in 2030, that would be a 38% compound annual growth rate from 2022. But the company guidance is through 2030, they're going to do about 50% growth rates, and they'll say sometimes more, sometimes less. So let's look at a different scenario, kind of more what Wall Street might be projecting, and just kind of see what else they might be projecting to get to the 150 a share number, because Wall Street's not giving a value to Tesla bot, they're not giving a value to autonomy, nor much of a value to Tesla Energy. Who does give a value to Tesla Energy that's like typical Wall Street is Adam Jonas, but he also has like very low profit numbers, very low projections for 2030. So let's just do a bit of a mix here, where Tesla only reaches 10 million in 2030. And let's just kind of scale it back from there. And just assume that Tesla slows way down, and then they just kind of grow by 1 million a year after that for just 2 more years. but this is a middle road scenario that's still gonna get us to 150 a share. So let's bump up this profit here. We'll bump it up to 9,000 a car. Some profit will be more, some will be less. So we're seeing that the implied value here is a little on the high side by about 15%. So if we knock off 15% off of that, it's about 7,500, something like that. That might be a little too much, but do that. So there it's taking the stock price to 145 a share. So this is a kind of the gloomy scenario that is implied by $150 share price right now. So if the only thing that Tesla does is maintain their current profit per car, and I'll get into why in a second. Let's just put that in there. Let's also put in that implied growth that I had before. This is 12, 15, 18, 21, 24. I don't think Tesla's going to stop at 20 million cars whenever they hit that number. I think there's going to be strong demand moving forward for Teslas. So when you put in this scenario, you have a implied share price or implied value today of $329 a share. So let's get into why I think Tesla may retain their profits per car. So like I said earlier, Giga Berlin and Giga Austin have been dragging down Tesla's gross profits, and they're scaling the factory up. And as they scale the factory up, the profit per car goes way up. And these are their two newest factories. So the cost per car should be reasonable once they scale these factories. The other thing that's happened is that Tesla greatly increased their prices since last year. And they're doing some discounting, but they're really haven't lowered the prices a whole lot. They lowered them in China, but they haven't lowered them in Europe or the US. So we're seeing pretty strong demand for that. They will need to lower prices in Europe and the US as they scale those Model Y factories up. But as they scale them up, their cost per car is going to come down, and Tesla is going to be able to pass that savings along to customers. So my model is not showing like FSD getting more valuable or people opting into FSD. That's the self-driving software that's now either $200 a month or $15,000 as a one-time purchase. It's not assuming any of that. I think it's a really conservative case that's Wall Street is baking in. Let me just make sure I show this 329 again. So what I just encourage you to do is to come up with your own numbers. You don't like where I have my numbers in a given year or the profit per car, or if you want to measure profits differently, then do that. What I am looking at here is a net profit per car, per non-lease car. So like that's an odd measure, and I may have done this calculation incorrectly, but I just was wanting to play around with the numbers a little bit. So what would Tesla need to do? Here's an interesting question. What would Tesla need to do to meet company guidance by 2030? So let's just increase this number until we get to 50%. right here. So I'm just gonna highlight this field. And just keep going until it gets to 50%. So there it's at 50%. Let me increase from here. That's 46%. So what it would mean for them to get 50% is like maybe in 2025 they are ramping the Tesla Compact or the Robotaxi, and they grow more than 60%. So I'm just going to put my thumb on the scale a little bit here and get the number in yellow up to 50%. So that would mean they would do 36 million in 2030. I think that's too high. But I think Tesla's gonna deliver value, deliver profits in other ways. Reason I think that's too high is like I just have a hard time believing they're gonna grow cars by 12 million in 1 year to grow their production. But let's just say at 2030, they just keep it at a steady state of about 36 million cars per year. If that was the case, and again, without all those extra business lines, then that would imply that Tesla's worth $493 today that the stock is. And that the present value of these future profits net of tax would be $1.6 trillion. So again, if you think my numbers are off, make your own spreadsheet, tweak it. When you discount, you got to discount once for every year out. So essentially divide by that discount factor each year. I don't think they're going to grow cars this much by 2030, but I think it'll be in other ways. I guess what's possible is with the Tesla Compact, it's a much smaller car. Elon's goal with the Tesla Compact is to do it in like half the space with half the number of workers and half the amount of materials and half the time. So Tesla may be able to grow faster if they're able to accomplish that goal. And it seems like a reasonable goal. So perhaps they could do that so that then their units could blow out to the upside. I think their profit per car could stay strong because Tesla could be very efficient with it. They have the highest or among the highest net profit per car of an automaker their size. So yeah, that's about it. Is Tesla worth 150 bucks? I think if you're being really conservative, yeah. I think you're being realistic. My opinion, the spreadsheet shows that I think it's maybe worth more than that today. So you can decide your own mind, trade at your own risk, do your own research, not financial advice. It's just the opinion of Halter Ferguson Financial. Anyhow, it's been good talking with you. Take care. Bye.